Hello everybody, Randy Patrick here. Time for Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns, and we know it's been turning and spinning a lot the past few weeks. So today is Friday, June the 14th. Hope you're doing well and everyone's doing well with their real estate endeavors. Topics for today will focus really on mortgages and foreclosures. So we're going to call today Foreclosure Friday as well too. So how about that? And again, one of the things I want to point out here, if you're not already a subscriber, please help my channel grow and click that subscriber button. I'd really appreciate that. All right, so today as we get going here, we'll talk about Quicken Loans, foreclosure filings, reverse mortgages, and their issues in personal economy here. So as we all know, the mortgage rates have been dropping over the past month and few weeks, and we've been reporting, I guess you could say week over week, that mortgage applications are rising dramatically. They're sort of booming now, and both on the purchase side of things and primarily on the refi side of the business. So that's keeping these guys busy. And if you actually hit to CNBC and Mad Money with Jim Cramer, he was interviewing the CEO of Quicken Loans, and he basically said that they are having record months. This quarter will be the largest quarter in the company's history, and I think June will be the biggest month we've ever had. It's both on the purchase side and the refinance side, he said in his recent interview. Wall Street considers falling rates to be a red flag in the economy, but he basically states that that's an opinion, and it leads obviously to more mortgage applications and more, more mortgage business for the companies like Quicken Loans. Now realize that Quicken Loans is a non-bank, so they're not insured by the FDIC. They don't have deposit accounts. They do things a little differently, and they have different criteria when they originate the mortgages as well too. So Quicken Loans is also, I guess, owns Rocket Mortgage, that brand, etc. And just as an FYI, Quicken Loans was co-founded by the Cleveland Cavaliers owner, Dan Gilbert. So there you go. So basically, as far as they're concerned, it's let's go, let's do more mortgages, let's refi. If rates are down, let's take advantage of this. So you're going to see this, and other companies are going to jump into the foray, going to market a lot more with respect to lower mortgage rates, which will bring people out of the woodwork. Only time will tell how much of this is going to be just pure refinance opportunities and what part is going to be, I guess you could say, focused on purchase mortgages, which will help people buy and sell property in the next little while. So that will have to be determined. But point is, record amount of, I guess you could say, record months they're having, and this is the biggest quarter they're having in the company's history, which really they started this business back, during the last housing crisis as well too. So there you go. Simple as that. Now, I want to hit to the foreclosure information now here. So Adam Data Solutions released their foreclosure report, the U.S. foreclosure market report for May 2019. Highlights basically say foreclosure starts continue upward trend in Florida, New Jersey, and Maryland. In Florida, obviously rank highest in the foreclosure rate. Now, overall foreclosure activity decreases 22% from a year ago. So basically, this report, what it does, it reviews the foreclosure filings, which are default notices, scheduled auctions, bank repossessions, things like that. So really, it's all foreclosure activity. So I guess you could say that when they look at this, they say all foreclosure activity is down 22% from a year ago. A lot of that includes actual repossessions as well too. But what we're actually doing though is we're not really focusing on what I think is very important, which is an increase in the filings. So however, in May 2019. We did see an uptick in the number of states increasing in foreclosure starts, going from 17 to 23, rising annually. And again, Florida is bucking the national trend with a continual annual increase. So the previous year it was 17 states that showed an increase in foreclosure filings. Now we're up 23 states. So there definitely is a trend there. I guess the interesting thing is how you look at the information and how you process it and how you listen to it. Because on one side they're saying overall foreclosure activity is down, and that includes, as I said, notice of defaults, repossessions, other items as well too, auctions, auctions being canceled, things like that. And then again, we're seeing trends on the upward side, which is foreclosure filings, which show people are actually in having issues with their home and their mortgage. So that's sort of what we look at right now, and that's how I look at it. It's sort of misleading. So I track the foreclosure filings, and those have been increasing quite some time. So again, Florida seems to be the leader these days with respect to foreclosure starts. They are continuing to double-digit annual increases, and I can tell you that just doing statistics that I can grab out of Florida, I see that rising all the time. So there's nothing wrong with this report with respect to foreclosure filings talking about Florida. Other parts of the country will have increases as well too, like New Jersey and Maryland are very they're increasing as well. So New Jersey, Maryland, and Florida rank as the top 3 worst foreclosure rates. So those are the greatest amount of foreclosures per capita per housing unit, and you're going to see ebbs and flows as well too, and that's where, again, I go back to the misleading information here. Is that, well, there are certain states that have posted annual decreases in foreclosure filings. Texas, for example, Massachusetts, Oklahoma, and New York. And I do find that some of this ebbs and flows with some localized issues that are happening in that marketplace. Also, I've noticed over the years that foreclosure filings they're not a very not a very stable month-to-month filings. There are certain times when filings are up and filings are down, and that's just the nature of, I guess, lawyers, lenders, court systems, whatever. So all these things, you sort of jump in and can add fuel to the fire, but ultimately in the end, we're still seeing an increase in foreclosure filings, and more states are actually seeing that at this point in time. So realize that. Again, this is from Adam Data Solutions. I'll post a link to this blurb from the report in the information section. But again, we do see a lot of activity happening now, and it is increasing in certain specific markets across the country. And again, it's kind of, to me, just like what happened in the previous housing crisis. So having said that, I took some information, and you really can't. I can't really post this because it was off a site that doesn't really allow you to link for whatever reason. But basically, it's almost like a bell curve. So here is 2005 and here is 2018, and you can see how in the middle of the bell curve, that's the number of foreclosure or percentage of foreclosure filings, I guess you could say, across the board year by year. So obviously we see it low, we see the housing crisis, we see the recovery, it's coming down. So we're roughly at the same place we were back in 2005. So just 2005, 2006 is precursor of the housing crisis. We're at the same overall foreclosure rate, so we've sort of gone up and we've gone down. We're back to the starting point, and now we're seeing, what they don't have here is 2019. Clearly, they haven't got that data all pulled up yet. But ultimately, in the end, we know that 2019 we've seen a lot of increases. So it's almost like we're starting the trend again. And as I said, a lot of the locations we're reviewing and looking at, they're having increases in filings. So simple as that. You may want to look at this as opportunities for investing, either for, number one, investing for earning income, building wealth, and also to purchase your home, because it's difficult to purchase a home. And I can show you that distressed property and primarily, short sales, you do get discounts when you purchase them as opposed to retail pricing of property. All right, now this is what's referred to as the dark side of the industry. So reverse mortgages apparently are not what they're cracked up to be these days. Apparently, there's a dark side of the reverse mortgage industry. They look at it as almost like predatory lending, and nearly 100,000 reverse mortgages have defaulted in recent years, according to an investigation by U.S. Today. Simple as that. That's the website and the newspaper U.S. Today. And what they're saying is that there's incentives to luring customers in to actually grab a reverse mortgage, tap into their equity, and obviously there's fees and stuff up front, and then whatever happens down the end, they can be foreclosed upon as well too, and cause some problems. So really, 100,000 reverse mortgages are hurting our seniors, and this just goes up until the end of 2017. So if you think about that, we also have a full year of 2018 and half a year so far. 2019. So that 100,000 number has probably increased over the past couple of months as well too. So for those of you that don't know what a reverse mortgage is, I sort of actually printed something out, and let me see, find it here, so I can give you a discussion on that. So basically, and this, so I'm clear, I know what it is, but I want to be clear for you guys. A reverse mortgage is a loan available to homeowners that are 62 years or older that allows them to convert part of their equity from their homes into cash. And the product was conceived as a means to help retirees with limited income use the accumulated wealth on their property to pay basic monthly living expenses. So like a reverse mortgage, so instead of you making monthly payments to a lender, it actually is making a payment to you, which is the borrower. So it's paying you a certain number, certain dollar value every month, which of course is debiting your value, your equity in your house. The borrower is not required to pay back the loan until the home is sold or otherwise vacated, as long as the homeowner has lives in the home, or she's not required to make payments towards the loan balance. The borrower must remain current on property taxes, homeowners insurance, and any HOA, homeowner association dues, which seems to make sense. So that seems like a great deal. Apparently, though, there's some pretty big time fees when we'll call application fees or processing fees, and probably some points here and there when you actually tap into your equity. So that's where they're making their money on this. And at some point in time, there's going to be issues, and there could be some foreclosures that'll work on this. Apparently, 100,000 plus over the past few years. So not very good to hear that. And again, one more item to add to the list of our foreclosure discussion for today. So which sort of brings us to, how I look at it. It's kind of like, the Great Recession. So I have a quick article here that basically is saying bankrate.com. They're a nice little website, and they do lots of surveys and stuff. And recently they did a survey back in May. And the interesting part about it was that, the Great Recession apparently has been over for a decade now. So that happened in 2008. So we're 10 years out of what's referred to as the Great Recession. And as I always say, the Great Recession to me was back in the 1929 apparently. But now, the crisis we had 10 years ago is referred to as the Great Recession. So people's finances haven't recovered from the recession, according to a survey by personal finance website bankrate.com. There are still tens of millions who are struggling to get even back to where they were before the economy took a turn for the worse, said a senior economist at Bankrate. More than half the Americans who were adults during the Great Recession said they endured some type of negative financial impact, and half those people say they're doing worse now than before the crisis. So there you go. So fewer than half, I guess 46%, said they've seen their paychecks grow since before it began. More than a third of those who say they or their partner lost a job during the past number of years after the recession. So again, this is where we're sort of looking at when I talk about foreclosures and where things are at. I guess the real question is what's going on in the marketplace right now. So if we see foreclosure rates increasing, so foreclosure filings increasing, we see our property values have risen over the past 10 years, clearly, or let's say the past 5 years, for certain, after we hit the trough in 2012. The past 5 to 6 years, going to year 7 now, the property values have risen. Yet we know that wages have not kept up with property value increases, even though that our jobs and our economy, appear strong, as to what we're told with the media. Clearly something is going on here, and people are having issues with a lot of other things in their lives. So I want to keep that in your mind, that the world is changing, the economy is changing, the housing market's changing. My expectation is we're going to see a lot more of these foreclosure filings. Certain states tend to lead the way. Florida just happens to be one that does. I know that what I pulled, the other day, I read the article here and I didn't agree with some of the stats they were quoting, so I pulled my information, and I got, probably about, maybe 20% more than what they were quoting as far as foreclosure filings in 2018. So again, just lots going on in the marketplace. But for me, these are all signs that indicate that we're moving in territory that, number one, we've seen before. So if people remember, we've seen the first housing bubble, I guess say boom, bust, burst, and crisis. We've been through that, and a lot of the stuff we're seeing now really is replication as to what happened just before the last housing housing crisis. So keep that in mind, everybody. That's it for today. I wish you guys well on your housing endeavors. As I always mention, if you'd like information on real estate or would like to talk about investing opportunities or what I call being a retail investor where you can help yourself buy a discounted home, drop me a line, drop me an email, and we'll be sure to connect with you guys and talk. So again, everyone have a great weekend. We'll look forward to speaking with you next week.